Hello and welcome from me, Philip Nothard, and Curtis Hutchinson to this special Motor Trade Radio podcast interview.
Today, we're delighted to welcome back Daksh Gupta, CEO of Marshall Motor Holdings, fresh from the group's AGM and the publication of its Q1 trading statement. We were actually keen to get Daksh back on the podcast to talk about some of the stories that broke last week following the AGM, chat about the group's latest acquisition, and also get his feedback on some recent industry headlines. So plenty to talk about, and welcome back to the podcast, Daksh.
Afternoon, guys. Hope you're all well, and thanks for inviting me back on the podcast.
And somewhere within all that, Daksh, you've managed to moving house. So busy people.
It's been particularly busy. Yeah, we're completing on our house purchase today, and we'll start moving in tomorrow. So joy, not. I mean, the only good thing with being really busy is, of course, it means I haven't hardly had to do any of the boxing. But that's my other half has actually all of that.
Well done.
Yeah,
all
good
the
time.
bonus of being busy.
Yeah, you've been busy doing other things, so therefore can somebody else sort it all out for you and let me know when it's done. Yeah, congratulations with that one. So, I mean, as Curtis has said there, I mean, lots happening, not just in general, but over the last week following the AGM. So let's get straight back into that. So let's start off with thinking about your thinking behind that repaying the 4 million worth of furlough payments and the retail sector grants back to the government.
Yeah, so I think it's let's be fair, as an industry, I don't think any of us expected to see what happened. I'm sure, like we were, lots of companies were out there looking at their cash flow forecast in probably the end of April, probably May, and thinking, oh my God, what is this going to all pan out? Because we certainly posted a sort of £9-10 million loss in the April, having seen the last week of March going, of course, because we couldn't get the deliveries out, we couldn't get all of the additional bonus payments that we normally would see for overperformance for Q1. And it's really frustrating because we were absolutely flying in Q1 until the sort of lockdown came. And we were sat there looking at what the cash position might look like, and it was looking pretty scary and pretty horrible because none of us knew how long this thing was going to last. Did any of us expect to see the sort of bounce that we saw last year? I don't think anyone can honestly say that. So, we posted the kind of circa £10 million loss in the first half. We then saw a massive bounce back, of course, which everybody benefited from as a result of those industry tailwinds. And for us, just to put that into perspective, we were expecting to make around £8 million in the second half. That's what we budgeted, but we ended up making over 31 million to be fair. So on the back of that, we actually hit our original numbers. But of course, one, we benefited from those sort of market tailwinds. But secondly, we all have to acknowledge we had massive support from the government. So in our case, we may have reported an underlying profit before tax of 21 million, but if you strip out the furlough money, strip out the rates, strip out everything else in terms of tailwinds, the fact is we would have all posted massive losses. So we were really grateful for the government support. I think if we didn't have that government intervention, the reality would have been lots and lots of people would have lost their job. We, one of the few groups that didn't make kind of mass wholesale redundancies. We utilised the furlough scheme what it was intended to do, which is protect jobs. So we kind of came through 2020. We did, at the end of 2020, see that we were sort of recovering. And on the 16th of December, we said it was our intention not to utilise furlough going into 2021. And we were conscious of the impacts on colleagues who were sort of, mental health, staying at home. We didn't have that many people on furlough. We brought them all back pretty much from October the 31st. But we were conscious that we didn't want to use furlough and sort of, go into 2021 with a positive mindset. But of course, what happened is, Boris had the difficulty to deal with around the pandemic in January. So, 70,000 cases a day, 2,000 deaths a day. So understandably, Boris had to make the decision to shut the country down. And at that stage, for the health and safety and well-being of our colleagues and customers, we had to utilise the furlough scheme. That wasn't our intention, but we had to put safety first, and equally, none of us had a clue. We were all kind of thinking, how long is this going to last for? But with the numbers that we were seeing, it was pretty scary. So, we got through January, got through February. We had a really strong trading performance. We recovered better than we thought. The trading position for the first 4 months was very strong. Clearly, there are some dynamics around there that are driving that around semiconductors and used car values really strong. And we did really well. And we just looked at it and we thought, as a company, lots of companies talk about values and integrity and doing the right thing just as we do. And we said, well, how can you stand there, say that you do these things, that you take corporate governance seriously, say that you have integrity, say that you're a good corporate citizen, and then know that you've got this cash position and then not pay it back. So we looked at that and we thought, morally, it felt the right thing to do. We felt it was it was us doing our bit to support the government and the country, because it's taxpayers' money at the end of the day. That was basically the history of how we got to that decision and the rationale of why we made that decision. And I appreciate not everybody is going to have that view. Different companies, every company is entitled to its own view. Every board has its own view. Every individual have their own view, and we totally respect that. It's entirely a decision, but that's where we were coming from, and that was just the decision that we made anyway.
And what's the reaction been like? In terms of your OEM partners and other dealer groups. What sort of a immediate reaction did you get to this? I wholeheartedly agree with what you've just said there, but what has that reaction been like?
I think it's been, look, we weren't doing it to get a reaction. That wasn't why we were doing it. We were doing it because, and in many ways, it's a shame that we're a public company, because we had to basically explain we're giving £4 million worth of taxpayers' money, of shareholder money away. We can't just not say that. We have to say that. So it was never about, and it's about doing the right thing. That's what it was about. And I think it has caught a lot of attention. And the reason I think it's caught a lot of attention is, one, to the best of my knowledge, unless you guys know otherwise, I think we are the only one in the automotive retail sector. And to the best of my knowledge, and I did check with our Nomad, there is only one other that I'm aware of, publicly listed non-essential retailer who has done this, because the retail sector has generally been hit quite hard, and the other company is Hotel Chocolat. So, it's caught a lot of attention because we were effectively non-essential retail, which is why we had the grant, and obviously it's had a lot of focus because, wow, here's a company that's done this despite the fact that they were seriously affected by the pandemic, and they've traded well and done well, which is why they've been in the position to be able to do this. Trust me, if we were sat here with a load of debt and we'd really struggled, I doubt we would have done it, to be honest with you. We did it because we were able to do it, and that's why we did it. But I think in terms of the reaction, it's really caught a lot of headlines. So I wasn't expecting to be... I was asked to go on Sky News on the back of that that release in the morning. So I was on Ian King Live commenting about it, and I think it's good for the sector. I think it's good for the sector that companies who've got the ability to do it, as we have done that. Yeah. So I think it's a good thing for the whole sector that, if companies can do it as we have been able to, then we've done it. And the reaction from our shareholders has been really positive. I've had loads of customers email me who have seen the coverage on Sky or whatever, and we were in the Times, the Telegraph, and they have commented, what a fantastic thing that you've done. Because some people have a view, and again, it's personal view, not saying it's right or wrong. Some people have a view, it's taxpayers' money. It's coming out of your pocket and it's going into other people's pockets. So some people are very sensitive about it. And again, some people are very passionate about, if you can pay it back, then you should give it back. Or if you don't need to claim it, then why have you claimed it? Because that's what it was supposed to be intended for. So a lot of our customers have given great reaction. I think the other thing as well, we have had probably... me personally, on the day, I must have had 9, maybe 10 managing directors of the various OEMs, including a couple that we don't partner with, just commenting on, how they felt it was the right thing to do. And I think one of the OEMs had said to me, it's so great to see that somebody's leading with a good moral compass. And I think I will read one text. I won't tell you which. I'm just trying to find it.
Everyone will be trying to guess it.
Could we guess it?
I won't tell you who it is, but this is one. Good evening, Dash. I just wanted to say, after your statements today, it's an honour to work with such a fair and ethical company. Kind regards, and I won't say who it is. And I've had a few of that. So, look, as I said, it wasn't done as a £4 million. I could think of better ways to get PR, or you can get a lot of marketing for £4 million. It wasn't done for that. It was done because for us it was about what we were saying about our values, and we felt it was the right thing to do. And genuinely, I'm really, really, really proud that we've been able to do it.
And I mean, let's not forget, you got 100% vote, didn't you, at your AGM? So I've got to congratulate you on that. I mean, that kind of demonstrates that ethos around of what you do and the way you lead your business. And I also believe that you and the management team also turned down your annual bonuses and when other businesses were obviously talking about what prompted their decision. So I mean, that kind of aligns with what you're just saying there, isn't it? That you and your management team felt that it wasn't right, I presume, to take an annual bonus at the same time as paying back that money to government.
Yeah, I mean, look, I think first of all on the AGM, I'm in my 14th year now. I always remember Curtis interviewing me 13 and a half years ago. So
yeah, you were in short trousers then, Dash.
I wasn't sure. I was about 12. I was about 12 back then. So no, I mean, look, I think to go into your 14th year, to have an 82% turnout, which is a very high turnout for any sort of vote. So we had 64 million votes come in, and to get 100%, it doesn't get better than that, really, does it? So, I mean, for me, I think that's a huge, I'm humbled, quite frankly, to sort of have that kind of vote. I think it says a lot about the way that the board, the way that the management team, the way that we run our company. So I'm really proud of that, because that's, as I said, it doesn't get better than 100%, really, particularly when there's 64 million votes voting for you. So I think, it's reassuring to know that I have the trust of, the board and of the, and I've got a fantastic board. They're so supportive of us as a management team. I just thought I'd get that in. But I think one of the things I'd say, the shareholders are incredibly supportive. They trust us, but that trust has been built up over 14 years. So, and I think that's amazing. I think in terms of the bonus thing, that was really hard because, again, we did hit the original market numbers we went into 2020 with was 20 million, and we came in with an underlying profit before tax of just under 21 million. So we hit the numbers. But again, as I said, we recognise, had we not had that government support, taxpayers' money, we would have made a loss. So to my mind, if you're getting taxpayers' money, it's kind of, and again, companies have to, and I said this on Sky News, this is a decision for individuals and this is a decision for boards. It's, I respect what other companies do, respect individual views. It's a matter for them. All I can do is talk about what we're doing. Our view was, and we did. Don't get me wrong. I mean, you mentioned I'm moving house. I could. House moving is not cheap. So, and some of my top team, and again, credit to, I think you've spoken to Richard, our CFO, before, John Head, Jamie, our ops directors, and Joe, our HR director, and Steve, our COSEC. We discussed it as a management team. We did, and you can imagine it was an interesting discussion we had through the year. Because let me tell you, if ever there was a year that my team deserved a bonus, it was last year. I mean, personally, I had 4 days off in 18 months, so I've never ever worked so hard ever. But you know what? There comes down to, you've got to look at yourself in the mirror and say, how can you? For me, I don't see how I personally could stand up in front of my organisation and say, I took a bonus, and whilst contractually you may have technically hit it, but as I said, it's an individual view, it's an individual personal perspective, and we feel we did the right thing, and I think clearly, that's what we've done, and that's why we've done it.
So another 14 years ahead for you then.
Oh, I don't know about another 14 years, but I think it comes down to, I'm genuinely really proud. Genuinely really proud we didn't do it. And it's difficult because we went first with our accounts, and you don't know what anybody else has done, do you? You don't know what any other company's precedents are, so you go first. So when you're going first, you're kind of setting the tempo. Yeah. As I said, look, this is not a criticism of any other company or anything like that. That is entirely their decision, their board's decision, and I think some of that's been well commented and covered about. As I said, it's not for my place to comment about that. That's none of my business. But that's just a decision we took, and whether we did the right thing or whether we did the wrong thing, I don't know. But hey, it's one thing. As I said, it's a personal decision.
Yeah.
Now, Dash, the repayments were all part of last week's AGM trading statement covering Q1 2021, which showed like-for-like new retail up 11.1% and used ahead year-on-year by 7.2%. So can you tell us about how these improvements were achieved, especially as most of these sales would have been done before the showrooms reopened in April?
Yeah, well, actually, Curtis, I've got to correct you, actually,
Oh,
which is a very rare opportunity. But, actually, what you said there is we were 11.1%. Actually, we were up 19.5%. So our market outperformance was 11.1%.
Right.
So the market,
Yes.
Yeah.
so the market was up 8.4%. To the end of April. Now, obviously, that's a strong increase in the market, but of course, we have to recognise that's flattered by the fact that we had lockdown last year, so low comps. So the market was up 8.5%. Marshall was actually up 19.5%. So the 1.1% that you quote there is actually the outperformance of the market. So stunning outperformance there. Our used car performance was actually up 42% to the end of April, but again, flattered by the lockdown last year. So what we did, the 7.2 that you're referring to, is if you do it on a like-for-like basis, which is because the SMT only quotes on a quarterly basis, the market was down 8.9% to the end of March. We were down only 1.7%. So again, outperformance to the market was 7.2%. So 11.1% ahead of the market on new retail, 7.2% ahead of the market on used. So stunning set of numbers. So how have we done that? Well, I think it's a combination of things. I mean, you've heard me sort of say before, I think we've got a very, very stable management team. As you said, 14 years for me. The team around me have been with us a long time. They're all, senior team are all very committed and locked in with all shareholders, and, we're all committed to the business. We've got a fantastic team, very stable. I think our culture is really strong. I think that makes a difference. And I think some of the things we've done last year through the pandemic have really helped us. So, last year, in many ways, the pandemic has been a good thing because what it's enabled us all to do is think, blimey, customers want to buy cars because they're in PCPs, which are event-driven transactions. But of course, if our retail operations are closed, how do they do that? Equally, we've got customers who want to sell cars. We're handling vehicles, which are depreciating assets. How do we do that? So we've adapted. And I think the great thing with this industry, we're very entrepreneurial. We've shown that over many, many decades, and we adapt our business model, which is what we did. So we've gone from more a physical retailer to an online retailer. And some of the things we've done is, we've looked at the whole marketplace, not just in our sector as franchise retailers. We've looked at all the online portals, all the online players, and say, okay, well, what are the best bits of what everybody does? And let's, quite frankly, unashamedly go and, replicate some of this and try and get the best model that's out there. So some of the things we've done is around 14-day money back guarantee. There's not many groups that are doing this. We actually did the analysis. I think there's about 17 groups that we counted in the top companies that are doing that. So not all of them are doing it. For us, that's about providing confidence to customers and trust that they can buy from us online. We've done things like £99 reservation online. We've done offering nationwide delivery and collection from any one of our retail points. So there's a lot of things we've done operationally to make us more akin to a digital retailer. We've invested heavily in the Marshall brand, so you may have seen us on, we've had about 120 million people view the Marshall branding, either on, Premiership football, the FA Cup, cricket, rugby, darts, you name it. So, we're trying to get out there in terms of building that brand proposition, and I think all of those things come together collectively to try and deliver the performance that we do. But it's not one silver bullet specifically.
So in terms of that then, I mean, in terms of that, the click and collect back to face, and people talked about this pent up activity of everybody wanting to get back to a physical showroom. How have you seen that across the business? I mean, have you seen that pent up demand for face to face, or is the click and collect model, that digital model that you've just been talking about, maintained? And is it something that is short to medium term, or is it permanent? I mean, what's your view generally, or is it different from brand to brand that you operate within?
I think it's hard to say, Phil. I think the difficulty you've got when you've got no choice, you are going to see an uptick of online inquiries. I mean, certainly if I look at the first sort of 4 months of this year, we took about 1,500 orders on without anybody even speaking to us, just digitally. But let's put that into context. It's still a very small percentage, low single digit percentage of all the cars that we sell. So very, very small. What we have seen since the operations reopened is some people are still buying digitally, but that number is coming down. To be clear, it is coming down. And obviously our total sales rates are going back up because we're open. So what you're finding is that actual percentage is going down. Now, I'm not surprised by that, because it's one thing to say, you have no choice. This is the only way you can buy because our operations are closed. It's another thing to say, actually, I'm going to do this because I have, I'm happy to buy a car online. And I think that's where, some people are sort of saying, will this be permanent or not? I think, this is going to be an evolution that's going to happen over the long term. My personal view, and, I could be accused of being a dinosaur here, this is a significant purchase. You are buying cars. They're a significant investment. You'll be living with them for typically 3 years. You want to see, feel, touch, see what the car's like, because you will spend hundreds and hundreds of hours in this thing. So you can't afford to get it wrong. Likewise, would you buy a sofa online without trying it out, without seeing how comfortable is it? What's the material like? I think very few people would buy a sofa online, something they're going to live with for many years. I think it's a sort of similar analogy now. But equally, there will be some people who say, you know what, I don't really give a stuff. I just want a sofa to go and sit on. I don't really care how comfortable it is, and that's fine if those people are out there. But I think this is a little bit unique, and there's clearly a lot of talk around disruption of the market, etc., etc. But time will tell. But equally, I would say there's plenty of space for all of us. We're dealing with a 10, 11 million market in this country of new and used vehicles every year. So, there's plenty of space for all of us.
And Dash, following on from that, what's your view on how the rest of the year could potentially pan out, especially as you highlighted in your AGM that you're now targeting full year profits on a par with pre-COVID 2019, which I think, and you'll probably correct me, 2019 was 22.1 million.
Yeah, spot on.
Oh.
Yeah, so... Yeah, exactly that. So what, as part of the guidance that we gave last Thursday, the AGM statement, we said we would be effectively upgrading our numbers, just as you said, Curtis, that to a minimum, and I think that's the key word. We've sort of said it's the exact words we used was, we see a range of outcomes, but we don't see that we're targeting a profit for the year of not less than. So effectively, that's a floor. So we're saying it won't be less than that. And I guess the reasons why we're using a range of possible outcomes is because you've got an issue where you've got semiconductors as a kind of an unknown. So what we did also say in the statement is, look, there's clearly COVID. I mean, who knows what happens with Indian variants? Who knows what happens in Q4 when the winter comes back? Difficult to make a judgment on that. But equally, I think the biggest unknown right now that we're all facing is around semiconductor supply. So we know there's a global shortage. We know different manufacturers are in different positions, and we're seeing some manufacturers move production away from sort of lower end cars and deploy those chips into more high value, high margin cars, which kind of makes sense to me. Some manufacturers are saying we haven't got an issue. So it's going to be difficult to navigate. That said, if I look at our stock situation, materially down, our consignment stock year on year. So that's starting to wash through. I don't think that the UK has necessarily seen any issue of significance so far, and I believe we're quite unique as a result of Brexit, because clearly most manufacturers stockpiled in December. So most manufacturers ahead of Brexit put a load of stock in, and then having stockpiled, lockdown got announced on the 4th of Jan. So of course your sales rate dipped as a result of that. So I think we haven't really felt any sort of real impact, and we haven't really seen impact because of that sort of double dynamic there. But I do think moving forward, we are anticipating stock challenges. But the counter to that, though, is, you then typically see margin increase. So you could have whilst you've got the headwinds of supply in volume, you could have some tailwinds on margin, but you could equally have tailwinds in used car margins, because obviously used cars are appreciating. So, you will have seen the latest announcement from the market around 6.5% increase on used cars, up not further to last year. So this is dynamics that none of us have ever seen in our lifetime. So you could have some positives there, but equally you've got to remember, if you can't get new car supply, it does have an impact on used cars, because 72% of what we sell comes from indirectly or directly the relationship that we have through new cars as a franchise retailer. So PCP renewals, demonstrator defleets, service courtesy car defleets, part exchanges, buying from fleet companies, buying returns from OEMs. So that's where that will flow through. It's not just going to be affecting new, it will also affect used cars.
And I mean, that was going to be one of my questions around that impact of the semiconductor. That, as you say, that the UK slightly behind some of their European international markets because of Brexit, bringing product into the market. That, and I don't know whether you agree, but you kind of intimated there that some people feel that it could hit Q3, Q4 harder than we're currently seeing it as we wash through some of the physical products and then see the shortage start to appear. I mean, the question is going to be is actually, and get your view on this, it's probably more of a personal view from yourself, Dash, but what is this going to be permanent in terms of the impact, or do we believe that the manufacturers, the OEMs, as they have done many times before, found a way around getting supply into the market, whether that's through putting the less popular vehicles on as demonstrators into the sector or taxing those vehicles just to get them registered and into the marketplace? I mean, what could something like that happen, do you think, or what's your view?
It's really difficult. I mean, Philip, we've never seen anything like this, have we? So it makes it very difficult to plan. I mean, I think some of our brands we look at, and one of our brands is saying, guys, we're not going to see an issue. And I'm thinking, okay, interesting. And then, others, who are related, shall we say, to that same brand are saying we're going to see a significant impact through Q3. So, you read some articles and they're saying this is going to be around with us till 2023. So it's really, really hard. As I said, we've not seen any material impact so far. But it is definitely getting some noise now. And I think the other thing that, I think one of the brands recently, I think it was Mercedes, went first, and good on them for being, I think they would have been required to put some sort of announcement out, which they did, I think about 3 weeks ago around their situation. And then, of course, others followed. So, Land Rover obviously wound back production. Mini have done the same thing. So quite a number I think everyone's in the same situation. I think the stat I read the other day is the entire global automotive industry buys around 60% of what Apple buy. I mean, that's one hell of a stat, isn't it?
Yeah.
So we are going to be at the back of the queue, unfortunately, and it also comes down to where are your margins, I guess. So, it's certainly way above my pay grade, Phil, to try and predict where that's going to be.
Similar to a conversation we had. Yeah, sorry, it's probably similar to a conversation that we had when we entered the COVID period, wasn't it? I mean, it was a new unknown period, and it was a case of do what you can do on a day-to-day basis. And there's areas, as you said quite clearly in that interview we had, right? It seems a lifetime ago now, but you can only control what you can control. There's certain things that are outside of your control, and I presume what you're saying is this is another one of them times.
Yeah, agreed.
Now, Dash, as we said at the beginning, it's been a particularly busy week for you and the business with the AGM, but only on Monday you completed an acquisition. So JLR Gloucester, which you acquired from Heritage Automotive. Tell us about the acquisition. What was the attraction of the business, and also maybe shed some light on how the acquisition pipeline is looking at the moment.
So I think, again, we called this out in the AGM statement. We said, look, the group's reviewing a pipeline of acquisition opportunities. I think, we have been one of the leading consolidators. So the sort of two franchises that came along on Monday were, bought and sold now 169 businesses over the time that I've been CEO. So I guess we're just about getting the hang of knowing what we're doing now. But I do think, as a result of that, the group's got a very, very strong balance sheet. So at the end of February, we called out we had around 30 million of net cash. We have no pension deficit. We have no liabilities there. We have, really good, strong freehold base. So I think, the people look at us and, we've got a good employer reputation. And I think that is important when people are selling their business, because if you've built your business for many years, you've got some relationships. And, you want to make sure they're going to a good home. So, equally, you need to make sure that whoever you're going to sell your business to has got good OEM relationships, which we also do as well. So I think that means we get a lot of acquisition opportunities tabled to us. We review them on a case-by-case basis. We only look at them on where they make strategic sense for the business and they make financial sense for shareholders. And I think, that really leads quite nicely onto the JLR Cheltenham opportunity. So part of our strategy is we want to grow scale with our existing brand partners. So big tick for us in terms of JLR there, because it's a brand that we've been with for many, many years. We do a really strong job for the brand there. We've got a fantastic relationship with, the top team there, Rawdon, Andrew Wilscroft, all the guys there. We get on really, really well. They're very supportive of us. And, our team do a great job led by Sean Allen, doing a fantastic job. And that's demonstrated last year. We were the number one dealer group for Jaguar. We were number two, disappointingly number two. For Land Rover. Sean Allen, if you listen, pull your finger out. But I do think, trust me, I'm on his case about it. That gave us an opportunity to expand into a market that I think is fantastic. So brand, tick, tick. Growth with existing partners, tick, tick, in line with strategy. And we want to extend our geographic footprint. So, we're not on the M5 corridor. So, we've come a few times sort of getting onto that M5 corridor. Haven't quite got there, but so it was a great opportunity. We're going to build a £10 million arch development next to Mercedes-Benz by the airport there. So that will be exciting. We bought the land for about 4.4 million. So that will be an exciting freehold development. And I think I have a view, if you can't sell Jaguar Land Rovers in Cheltenham with that demographic, not being funny, but we should all give up and go home, shouldn't we, really? So that, to me, should be one of our best businesses. And you look at the population count of Cheltenham and Gloucester, it's around 250,000 people, plus the catchment area around it. So, yeah, very excited. I went to the business, as I always do, day one, any acquisition. I like to go and welcome all our new colleagues. I was with the team yesterday. And to be honest with you, some really, really good people there, really enthused, really excited about the future. And I think what we bring to the table is, under their previous ownership, they only had one franchise. So I was saying to the guys yesterday, look, if you've got one Jaguar or seven, you've just increased your chances of choice to customers by 700%. On Land Rover, you just increased it because you've gone from 1 to 9. You've just increased it 900%. So that's why it was a fantastic acquisition, and we hope we'll be able to grow in future with Land Rover as well.
Yeah, no, it really does sound like a good fit for the business. Just as a quick follow-up, Dash, going back to that acquisition pipeline, are you actually seeing more opportunities as a result of the 2020 lockdowns? Are there more businesses coming across your desk, as it were?
I would say it's probably normal, I would say, to be honest with you, because it sounds a bit weird, because you would instinctively you'd be thinking, you're going to be really busy. And I think what you're seeing two camps. You're seeing the stronger groups are getting stronger. The well-run groups are doing really well. And I think where you've got weaker, smaller, groups who are struggling, that are not well managed, they are getting weaker. But sometimes as well, these businesses are not necessarily structurally right, because they may not be the right brand or not the right market. Because you could have a brand that's fantastic, but if it's in the middle of nowhere and the market's not quite big enough, because we know so many customers do buy locally and get their cars maintained locally, it just may be that structurally it's going to be difficult for that business to make a return. So we see a lot of business. I mean, I literally make a decision within 1 minute. Within 1 minute of getting something on my table, as it's yes or no. And I'd probably say no to 6 or 7 to everyone that I look at. And I would say when we go and say when we want to buy it, then we have a very high closing ratio if we want to buy it. But we're very, very selective, and we have a very tight acquisition filter that we look at. As I said, we want to grow with our existing brands. We're very clear on the geographic footprint we want to be. We've all been consistent now. Curtis, you would have asked me about it back in 13 and a half, 14 years ago. We want to be in England. We don't want coastal towns. We don't want to be inside the M25 unless it's a premium brand. We don't want to be in London, Birmingham, Manchester. And that's our strategy, really. It's pretty simple.
And, I mean, kind of connected to that, and we've spoken about it a number of times, Dash, both on the podcast and through things like our Cox Automotive Insight report, but we couldn't let you go without talking about agency model or distribution model, of whichever way you refer to it. And more recently, VW Group, along others, have obviously it's been hit in the headlines of recent, but VW Group talking about trialling it in terms of their EV strategy. Do you think this is accelerating, or do you think actually it's the same manufacturers, it's just been a bit more sort of in the public eye a little bit more, or do you think it's, there's a lot more, just happens to be a lot more conversations taking place? Because obviously there's things going over in the US with Tesla trying to go direct to consumer, which currently it's illegal to do in the US, I believe. Yep. And there's things happening in some of the international and European markets. What's your current view on that now?
Oh, blimey! I thought you said a nice, easy, nice question. So, I think the reality is this is coming. I do think you said it is accelerating. I do think it's accelerating for sure. I don't think this should be a surprise to anybody. The reality is we've all known for many, many years manufacturers are going to have to change their business models towards electrification, because if they don't, they are going to get fined and they're just not going to be here. So they are in a position where they're having to invest significantly in EV, and it's not cheap. And that's one of the reasons why I've been really clear we only want to invest with the right brands, because I'm not convinced every manufacturer is going to be there for the long term, to be honest with you. So it is almost one of our NEDs talks about, survival of the fittest. I think that's a really interesting way of looking at it, because I think you will see some manufacturers will leave markets. We've seen this recently with Mitsubishi. We've seen it with Infiniti. You're going to see consolidation with, we've seen this again recently with PSA, with Opel Vauxhall, with SCA, now Stellantis. So for them, it's a case of they've got to take cost out of the distribution chain, because for them, they've got to invest in EV. Of course, part of that cost for them in terms of distribution comes from manufacturing, but if you've ever been to a manufacturing plant, they're very highly efficient. You can't take cost out there very easily. They operate just in time operations. So, from that perspective, there's not a huge amount of cost that you can take out there. The next thing is the national sales companies. And of course, I think most people would recognize that national sales companies have been consolidating. They've been taking cost out in their operations. They've been running leaner. But of course, there's only so much they can do there. But the biggest part of the distribution, which is typically around 35%, which is basically the dealer margin and tactical incentives that manufacturers use at an NSC level to drive volume, that's where there's a big slug of margin. So of course, I think what will happen there is there will be a reduction of retail points for sure. I think there will be manufacturers who will need to try and claim back some of that margin in order to be competitive. So the model will have to change. It's not a case of will it change. I think this is absolutely coming. The question then comes around twofold. One, that people will say this is a way for manufacturers to basically get rid of retailers. I don't subscribe to that personally, and I accept people have different views. But my personal view is it comes down to if we do not exist, who's going to do the fulfillment? Who's going to do the test drives? Who's going to do the warranty recalls? Who's going to do the servicing work? Who's going to do parts supply? Who's going to do handovers? Who's going to do familiarization drives? Who's going to do all of this? Now, you could argue dealers all go and manufacturers are going to do them. Well, without wishing to be disparaging of my manufacturer colleagues, they haven't got a great track record of retail, have they? Let's be fair. So, and equally, even if they were brilliant at retail, they haven't got the money to do it right now because they're having to pour everything in EV investment. So for that reason, I fundamentally believe there will be a role for retailers, but there will be fewer of us, and I think everybody recognises that. And I think that's part of what the Stellantis thing was about last week, which is a good thing in my book because it's overdue. I think you then come down to, okay, if you subscribe to that, my theory, I'm not saying it's right or wrong, this is my strong belief, it then comes down to remuneration. So as long as we are getting the same gross profit contribution, okay, some would argue, and again, I understand the comments and equally share some of those thoughts that you could be stifling to an average performance, but equally, that's just one aspect of our business, which is around new cars. You have other aspects around used cars in particular. There's F&I sales on used cars. There's after sales. There are other things that we can sell through our business that enable us to be entrepreneurial. But fundamentally, if you look at the contribution that we make out of new cars, you typically will say you'll have a wholesale margin, you'll have margin that relates to some sort of bonus, you'll have F&I income, but then that may be the total gross profit that you generate, but you then have costs to come up because you have marketing costs, you have demonstrator costs, you have stock for carrying consignment vehicles on your balance sheet, which of course then moves because of course the manufacturer will take all of that. So as long as all of that, whatever that comes through in terms of that gross profit contribution less the cost that you carry, whatever that number is, as long as your remuneration is in line with that, then in theory you should be okay. And of course you do then arguably de-risk your balance sheet because the stock's off your balance sheet. We all have the horror stories where we've ordered the wrong car and we've sat on it for years and then had to register it as a demo and it goes fully paid and all the rest of it. So it's going to be an interesting time. I think the one thing I'd also say is, as long as you subscribe to that manufacturers require us for fulfillment, then there is a shared interest that manufacturers will keep us going because they keep us viable. If we're not viable, companies like us, if I have one of our brands who say, well, we're going to take away the margin and we're going to take away a used car opportunity, which we may well be enjoying today, and we're going to do it elsewhere, and that's taken away from our gross profit contribution such that the viability of our business is not there, we will have no hesitation in simply, we'll have a legal obligation as directors of the company to do the right thing by our shareholders. That's what we're here to do. All we will do is we'll simply say, okay, well, fine, if that business isn't viable, we'll come out of that business and we'll put our investment into franchises that do want to make sure that people make a return in their investment. So it's going to be a fascinating time, but I also take a lot of comfort from, ultimately, manufacturers want good partners, good retailers who do a good job for them and for their customers. Because
if not, they'd have to go and employ. At the end of the day, they still, like you say, they haven't got that function currently, have they? They haven't got the functionality that the dealers currently do. They haven't got that resource. So without the dealer, they'd need to go and find the experience, the expertise, having, people like yourself with leadership team, 14 years in the chair, etc. They'd have to go and find that, wouldn't they? So there is that relationship all the way through this. It's just it'll look different and it'll operate differently. And I think the key with this is, and I think one of the things I've picked up is it's about the investors and the understanding it into it more than anything else. It's the profitability can remain the same. It's just the way the profit is generated may be slightly different.
Yeah, I completely agree.
And final question for you, Dash, and it really follows on from what you were saying about Stellantis, because obviously that was a big story last week. It generated quite a few headlines. A lot of the story was based on the fact that they've done it now because of the timing, because of block exemption being renewed, changed in 2 years' time. So hence that 2-year termination period. Do you foresee other brands doing this? Bearing in mind Stellantis covers a lot of brands itself, Vauxhall, Peugeot, Citroën, Fiat, Jeep, to name just a few. Do you think we'll be hearing from other brands? And how do you think this will actually affect the look of, say, Marshall Motors in 2 years' time?
So I think there will be other changes to come on. I think the fascinating thing with Stellantis is, they have, I think from memory, around 24% market coverage off the top of my head. So will they dual franchise? Will they multi-franchise? Will they say to me, Dash, if you want to have Peugeot, you've got to have Fiat? Will they say, I think it's going to be fascinating to see what they do, because equally for manufacturers, brand is everything. Brand. When you go to OEM university, I'm absolutely certain lesson one is above all, our brand is the most important thing. And if you start contaminating, how do you see Citroën and Peugeot sharing? I just can't see that. How do you see, Vauxhall sharing with Peugeot? I think that's quite difficult as well, because there are overlaps of products. So could you see a situation where, Peugeot suddenly becomes an SUV? And I don't know. This is just me, theorizing, I guess, and speculating. But could you see maybe Peugeot becomes like an SUV brand, and Vauxhall becomes more of a hatchback saloon type brand? So you're not competing. I don't know. It's going to be fascinating to see. Do I think other brands will do it? I think smaller market share brands will have to do it to continue to be viable. I am not a big fan of dual franchising. I've been consistent on my views on this for many years. 60% of the group when I joined in in 2008 was multi-franchising. That number is 0 today. I don't like it. For me, I believe our job is to deliver manufacturer brand values and the experience that customers buy into when they're buying one of the brands that we deal with. So I think that's quite important. Equally, I think where multi-franchising is always quite difficult because you end up becoming jack of all trades, master of none. But equally, I do understand that for certain brands, it is not viable unless you are sharing with somebody else. And that's fine, but it's not something that, I'll be keen to do. I know you could argue, well, Jaguar Land Rover, but it's the same parent company. Yeah. So I think it's going to be fascinating to see how this all plays out. But, if we start to see maybe 2 or 3 manufacturers leave the UK market, possibly, of course, when that happens, without wishing to be awful about Mitsubishi, because it's obviously a tough time for those involved in those franchises. And, we wish them all the very best for the future. But, I'm sat here looking at my portfolio represents 78% of the market. If Mitsubishi covers, I think, about 1% from memory, well, all things being equal, when that network goes, I should increase my sales by 0.78 because I'm going to pick up that market share because those customers have got to buy something. Equally, if those forecourts go, that used car opportunity has gone as well because those cars have got to go somewhere. So, of course, what that does do is it drives through additional throughput through my operations. And again, it comes back down to the comment that our non-exec made, Alan, which is basically survival of the fittest, Yeah. Fortunately, we're pretty fit, so we'll get through it. But not everybody will.
Yeah, no, you're right. And I think, and Curtis laughs at me because I say Carlos, but Carlos from Stellantis, there was a couple of, like I'm on first name terms with him. But, a couple of points he made is, like you say, it's about survival. He's got 14 brands now and they all need to perform. They all need to prove themselves. He made a point that it took over 12 months and 12,500 documents to do the FCA and PSA merger. And obviously out of that, then, do you know what? It's probably time ahead of the block exemption, agency modelling and the merger that there's probably new contracts were probably overdue, weren't they, I suspect, in many ways, to bring everything in line with each other. So I think it's going to be interesting, but I think, as you say, there's probably going to be winners and losers out of the back end of this in some form or another, but without doubt the market is generally consolidating and the strong partnerships are increasing.
Yeah, I completely agree with that.
I mean, it's just for me to say, Dash, good luck with the house move. Like you've got nothing else on at the minute, but as you say, it's a good time for everybody else to be doing it for you, and then you can just walk in, put your feet up and put the telly on as you wish. And again, well done. Congratulations to your next 14 years leading Marshall's Motor Group, and fantastic work on your new healthy lifestyle, because watching social media, absolutely awesome work. I don't know where you're up to now, but I think you're well on track for whatever targets you've gone for and probably achieved, I suspect.
Yeah, no, I've got to say that's something I started it on Boxing Day. I will just at this point that for a lot of people, lockdown has been really difficult because personally, I sort of sat in an office for far too long, sat doing Zooms, sat doing Teams meetings, and I like a drink, to be perfectly honest with you. Not an alcoholic kind of guy, but I do enjoy a drink, And during Q4 in particular, with the sort of weather, I did put a lot of weight on, to be honest with you. I went up to I've never been 13 stone anything, let alone 12. So I got up to 13 stone 6, and I got on the scales on Boxing Day. And I'm the sort of person, if I'm going to do something, it's done. I said, right, that's it. I'm stopping drinking, and I'm going to start exercising, and that was it. Literally made the decision there, and then went and did it. And the one thing I would encourage people to do, take care of themselves. It's easy to, make an excuse as to why you can't do it today, why you can't do it today. And one thing that's been fantastic in my organisation is I'm really proud because I've been telling people what I've done because I want them to look after themselves. And it's been great in our organisation. All the stories that people have sort of said, you've motivated me to go and do it. You can go and do it. It takes you. One of the best things that I do is I walk. I started walking, and near where I live, it's reasonably quiet, so you can find you can work. So, and all I simply do, and by the way, I should probably tell you, I'm actually walking now. I'm in my living room. I'm literally just walking. I've walked the whole time that I've been on this call. No, genuinely I have, and I've been walking now for an hour.
You could have taken some stuff to part of your move. You could have been packing and getting your exercise in.
Sure. No, but I think there's a fixed point. How many
steps you've done, Dash?
Today I've done 7,180 steps so far.
Most of them during this podcast.
During this podcast, yeah.
Yeah.
So,
excellent.
So I would say to people, walk, because you can do it. You can work, and you can do calls. I actually take my iPad and I walk near where I live, and I do Teams calls on there, and I probably do anywhere between 10 and 13 miles a day. So that's what I would encourage people to do. Look after yourself. You only have one you, and try and look after yourself. I think it's important. So and that's for me personally. If I can find time to walk 10 to 13 miles down, I'm a busy person. I mean, yesterday morning I started at 7 and I walked. By the time I'd got to 9 o'clock, I'd walked 7 miles. So if I can find time to do that now, in fairness, I'd made about 6 or 7 calls in that 2-hour time slot. So it can be done. It's just about being a bit more efficient. It doesn't mean you've got to lose an hour from your personal time. See if you can, find time to go for a walk at lunchtime or something. And me personally, I've gone from 13 stone 6 and I'm 11 stone 1 today. So if I can do it, and I'm a busy person, and I won't say I'm the fittest of person, but if I can do it, so can you.
Yeah, well done with that. Fantastic.
Yeah, no, well done, Dash. And look, many thanks for joining us today, Dash. It's always great to have you on the podcast. So it's great to have you back, and thanks for bringing us up to date.
Thanks for the invite, guys. Really good to talk to you, and I look forward to seeing you soon.
Definitely. Yep. And like I say, all the best with everything. Fantastic.
Yep.
Thanks, guys. Take care.
Thank you very much, Dash. That's all for now. You've been listening to a special Motor Trade Radio podcast interview. We'll be back with the industry headlines on Saturday. Until then, it's goodbye from Philip and I.